All right, welcome to Ask the Experts. Today we've got Drew Brown from Home Equity Bank, and Drew has been in the mortgage space for about 20 years, and you've now been in the lender side for the last couple of years working with Home Equity Bank. Before we get to reverse mortgages and the whole concept of what this incredible product is all about, first we have to address a couple of your awesome hobbies, because on your 50th birthday, you went skydiving.
I did. Thanks, Joel, for having me today.
Were you terrified? Did you soil yourself?
Not the second part, but I was terrified, no doubt about it. Although I went up with hopes and aspirations and a lot of fear, and I came down in one piece.
And you decided to take up scuba diving as a hobby now. How long have you been doing that?
Just about 2 years now. So the fact that I jumped from 18,000 feet and now I can go down to 110, I pretty got all the atmospheres covered. So yeah. It's a wonderful experience. It's a wonderful place to be. Yeah.
And I'd be remiss without identifying this, because I know that people watching are thinking the same thing right now, but you could pass for Jim Carrey's stunt double.
Jim Carrey. Thank you. I get that quite often.
Especially with the beard now, man.
Yeah, this is my COVID quarantine beard, although I'm not technically under quarantine, but we're all self-isolating and following the rules. So, and how this turned out on the 16th of March, the first day that we had to do this, I didn't have any razors left, and they said, don't make non-essential trips. And I thought, well, I don't need to go buy razors. So 8 weeks later, here we are.
There you go. Looking like Jim Carrey's stunt double.
Exactly.
Let's talk a little bit about the reverse mortgage, or I love in the UK, they call them home pensions. And it maybe is one of the most misunderstood products in the mortgage space for not only homeowners, but home buyers, real estate agents, and even some people in the financial world. But it's becoming one of the fastest growing spaces of growth in the mortgage industry. And I wanted to start off first with, for people that aren't familiar with what a reverse mortgage is, because when you explain it to them or when you mention it to them, they kind of turn their head and they go, how does that work? What's that all about? So give us a bit of an overview of what a reverse mortgage or home pension is, and how the whole concept works.
Sure. Thanks, Joel. So a reverse mortgage is, I mean, the name can be a little misleading. So what a reverse mortgage does is it allows the client that's over the age of 55 to access up to 55% of the value of their home. The reverse part means that you don't make any payments while you have the mortgage. So when you have a normal or forward mortgage, when you're making payments, the balance is going down. In a reverse mortgage, you don't actually pay us back until you sell your home, whenever that happens to be. So the interest would accumulate over time until we are paid back. So that would be the explanation of what reverse means, but it's really not completely accurate.
You're right. So in the reverse mortgage, when the product's been around for 35 years?
We as a company have been around for 36 years. And so, but no, the reverse mortgage concept has been around longer than that in Europe. And in the United States, I'm not sure. I think it came out around the same time as it did here. And that's a very different product. And that's where I'll talk about, if I can right now, about the myths and the misinformation. A lot of it comes from south of the border. And when I say that, people in today's world with technology will Google reverse mortgages. And of course, without putting Canada or Ontario or your address, you're going to get the most number of hits that come up, and they're typically from the United States. And they're very different there. And that can be confusing for clients. And so, we get these myths and if I can go ahead and start with one, we're here to take your home.
Yeah.
I
was going to say that one of the biggest misconceptions was that a reverse mortgage is designed to steal homes from old people.
That's what people think, yes.
And if anybody knows anything about the lender space, the last thing in the world a lender wants to be is a landlord. And in fact, these products turn out to be a benefit in a bunch of different ways, because the way you guys have structured, especially at Home Equity Bank, the customer is never upside down in their equity, and they will never have to pay back more than what the home is worth, the way you guys have structured, right?
That is correct. So it's what we call our it's a lifetime guarantee, essentially, meaning that you can live in your home as long as you like. And once you sell it, we will accept fair market value for that home at the time. And if that means that you sold it for less in the market because of whatever's going on and you owed us more, we'll absorb that difference. Meaning that we cannot come after you for other assets in order to make that up like the big banks could. So that what we're classified or categorized as is something called a non-recourse lender. So in that case, we don't have a recourse to come after a client that may be short, which is fantastic, which means that.
Uh-oh. Oh, we got a freeze.
5. Yeah, and at that
Sorry, Drew.
point,
I'm just going to back you up a bit there. Your screen froze for a sec there.
yes,
When
and
you
I
were saying,
apologize. Sometimes that happens.
that's okay. Welcome to the new world.
Yes.
You were talking about how when people go to sell their home, if there's a
Yes.
situation where they're upside down in the equity, you guys won't come after them for that. Like if the market falls out or something like that, you guys aren't going to come after them for the difference. You absorb that.
That is correct. And so that is why we only go up to 55% loan to value. And that is scaled to age. So we want to make sure that the clients, one, have equity, and two, we're not holding a lot of properties that are upside down, obviously, at that point. We're not holding them, but at least having been paid back less than we were expecting at the time. So we're very careful in monitoring property values across the country.
Now, I've got a family member and a friend's family member who are both recipients of reverse mortgages, and it's been life-changing in a couple of ways. The one key thing is that it's managed to keep them in their home, and they haven't been forced to sell and downsize. So let's talk about some of the benefits of a reverse mortgage and how people are taking advantage of this and putting that money to good use.
That's an excellent question, Joel. So, I mean, I've been at Home Equity Bank for almost 5 years now, and as much as I think there's a pattern, there isn't, meaning the reverse mortgage is being used for all kinds of purposes. And sometimes they're new to me, which is amazing. So, but the biggest one we find is to alleviate the stress of debt for most folks. If they've retired and something has happened to their income for some reason, and let's say in today's world, if they were heavily invested in equities and were expecting income from that in the future, that's going to be impacted as a result, which impacts their lifestyle potentially. And if that's the case, let's say they either have a small mortgage or no mortgage and equity in their home, they can exercise that tax-free in order to supplement their income, either by paying off debt or taking it monthly in order to pay their bills or improve their lifestyle. Another thing that we see quite often is people taking reverse mortgages to help their family. And I would think we're seeing it now, actually, that during this situation, we're seeing more of that, where parents and grandparents are looking to access the equity in their home to help their kids get through this difficult situation.
And in this situation too, when you talked about taking out the money tax-free, let's say somebody's got a home where they're able to access, say, $300,000 in equity. And I just wanted to recap this a bit because it's important. They can take that money out kind of as a monthly stipend, as a paycheck, essentially, or they can take it out in lump sums, right? If they had to pay down debt, help a grandchild or a child with some sort of student debt, or use it for investment purposes and buy property, buy equities or stocks and bonds. Like it becomes sort of, you become your own family bank.
At this point, yeah, and I think that term probably is going to be more relevant now. I mean, you've heard of the bank of mom and dad, but most of the time that was a negative connotation. Now I think it's going to be much more of a positive conversation, only because, you know, there is, I'm not even sure what they said, there's trillions of dollars of equity for folks that own homes over the age of 55. And we feel that property values will be pretty stable. I mean, there's going to be some dips, of course, with what's going on, but going forward, we know that the money's out there to help folks. We just need to get them connected with you and with us.
And with you guys seeing, as you're dealing with aging populations, what are you seeing in terms of debt people are carrying and pension income, and how has that changed over the years?
It's changed a lot. So first of all, a lot of people are working longer. As in they may have a part-time job even over the age of 65. They could still be full-time employed at that point. I think I'd have to look up the most recent, but last year the stat was over 55% of Canadians have a mortgage over the age of 55. And so over the age of 65, that goes down, of course, but there's a high percentage of people retiring with debt. That seems to be the biggest reason people would use us, especially in this situation now where they would still have the debt, but then their income may have been affected somehow as a result of COVID-19.
What about with any mortgage product? There's pros and cons. We've talked about some of the awesome benefits of it. What are some of the challenges with a reverse mortgage? Because it's not a product for everybody, and maybe differences with interest rates between a traditional mortgage versus a reverse mortgage. What are the key differences there?
Okay, so some of the key differences are it's geared to age. So you have to have a minimum age, obviously, of 55 to do this. But there's the same process as applying for any other mortgage, meaning that an appraisal would be necessary on the property. Independent legal advice or a lawyer will be involved in the transaction. And of course, the client would work with their broker, and the broker works with us in order to have a smooth transition from application start to funding finish. There is a fee involved. We do charge a fee, and it changes depending on which product that you choose, as we do have more than one product when it comes to reverse mortgages. And I'll note that that's all we do is reverse mortgages, just as I said, more than one product. But other than that, I mean, more of the barriers are psychological, if I can say that, meaning that most people are hesitant because of what they've heard. And it's not because of what they heard from you, Joel, or from me, because we're experts in this industry. It's what they heard from their friend's neighbor's brother, whoever, right? Who maybe heard of somebody that had a reverse mortgage that had an issue of some kind. Yeah. We don't even know if it was in Canada.
Yeah, right.
You know, so that, and it's amazing. It still amazes me as to how much trust people will put into opinions of people that aren't experts, right? And that's always been a barrier for us. So really, one of the biggest barriers is for the client themselves, just to kind of get over what they believe in and try to open their mind up to the truth as to what it really is.
Well, it's funny because people have problems with traditional mortgages too, and you can find complaints about traditional mortgages all the time, all over the place. And, you know, reverse mortgage is no different. I love the term they use in the UK of home pension, because you have people taking that equity in their house and using it as a monthly paycheck. And from your experience, what's sort of the standard length of time people are holding these before either the mortgage holders pass away or they sell their property and get out of that mortgage? Like what's the average time frame?
So statistically within our company, because we look at this metric, it's 7 to 8 years. I know that sounds kind of short, but that's the average. So of course we have some clients that start with us at 55 and have stayed right till the very end, whenever that happened to be. Kind of the bread and butter is 65 to 75 years of age is the majority of our clients. And so if you think about it, if you're 75 and you live to 85, then that average would be 10 years. Right. So it's in that ballpark. Yeah, and I mean, I don't specifically have a statistic as to how many paid back because they sold versus how many paid back because they may have passed away. Right. But, you know, we know that seniors in general, meaning people over the age of 65, 92% of them want to stay in their homes. They just do not want to move. So we don't see a lot of movement as they age, as in they're selling their home and then getting another one with a reverse mortgage. It's typically the last place they're going to be.
And I think one of the other key advantages when you talk about how the reverse mortgage is structured, if you've got, let's say, an elderly couple who have taken on the reverse mortgage and one partner passes away.
Yes.
One of the advantages is if there was an income-based mortgage, like a traditional mortgage, they'd still have to be making payments. And if one income is gone, that could put the second homeowner in jeopardy. And with a reverse mortgage, things just carry on and the person's safe in their home, right?
That is correct. So we need to be notified when the last borrower has passed away or sold the home. So, and actually the scenario you've just mentioned, we see a lot of that client, and they're mostly women, who come to us after their spouse has passed because they've tried to manage on one income for 6 months to 8 months because they maybe still had a mortgage and they're paying the property tax, and now they've had to hire somebody to do the yard work and those things, and they start to get a little behind or a little nervous. And meanwhile, you know, they do not want to leave their home, and that's we see that a lot, that client, mostly because women live longer than men, and so we see more of them that way, and we're a perfect situation for that because now in that situation, we've now been able to get rid of whatever debt there was, if there was any. And if not, we've been able now to supplement that client's income going forward, and they get to stay in the home that they love, and not have to worry financially about what's going on. And it's life-changing. You'd mentioned that earlier, and it really is. I mean, I've had some clients, you know, that have broken down in tears because they just didn't know what they were going to do next month. And, you know, it's,
oh, we got to freeze again. Sorry.
Never had a client come back and say, I wish I didn't do this. It's changed almost everyone's life that's ever taken this product.
Well, like I said, I've got a family member that has taken a reverse mortgage, and not only has it allowed him to keep his home, it has changed his income structure and allowed him a way better quality of life. One final question about this, I think, before we wrap things up is, let's say, because for people that are sort of our age and or people that are older, who would be, or how would you describe sort of the perfect customer for a reverse mortgage? What does that person look like? And because I know for people our age, we're thinking of parents and grandparents that may be in that need area, or
Mhm.
people watching that may be that age 55 plus and maybe in that position. What's the ideal customer?
Well, the ideal, every customer is ideal, if I can say that,
Right.
honestly. But as far as where a client would maybe receive the maximum amount of loan to value, you know, like that kind of 70, the first end of the baby boomers, people born kind of 46 to 56, 65 to 75 years of age, will get a significant amount of loan to value for their age. And they tend to be, especially at 65, recently retired, or they've come from a company that maybe they've had to downsize the pension, or they had pension issues, or their pension is decreased, or those kinds of things. That's where we tend to see that. So now with the change economically as to what's going on, I think we're going to see everybody almost. Like I don't think it'll be so much a pattern or a fit. If they're over 55 and they own a home, they may be considering us now where they
Right.
weren't before.
So then let's wrap it up on this question then. What advice would you give for anybody that's considering a reverse mortgage, and what types of things should they be looking at evaluating to see if this is for them?
Well, the first thing I would suggest they do is get in touch with their mortgage broker or mortgage agent, because we have trained you specifically, and you have the resources and tools available to you to give them the correct information. So that would be first. The second thing that I would do is, certainly check out Home Equity Bank. We're online. We've been a company in business in Canada for 36 years. We're Canadian owned. We're 100% Canadian owned, actually. And we've got employees that have been with us for 20 plus years still, because they really believe in this product, and we believe in helping people. So the other thing that I think they should consider at that point is don't listen to people that don't know anything about the product. If you know a family member or friend that has a reverse mortgage, seek them out and ask them about it. Otherwise, get in touch with your broker, because they'll put together a plan and a solution for you that's going to, have this work well for you. And be open-minded to it, because it is a lot easier than you probably think. And it comes with the things that you think are going to go wrong don't happen.
Right. Drew, this has been a really cool knowledge session, and I think I'm a firm believer in education equals power. And when you learn about products like this that you may not have knew about before or known about, and it puts other options on the table for people that may be in this marketplace at 55 plus, it can be a game changer and sometimes a lifesaver for a lot of clients. And I know how great you guys treat your clients at Home Equity Bank. The chip reverse mortgage has been sort of synonymous with the older adult segment for the last 36 years. And I'm really grateful you shared some information and stories with us today. Before I let you go, please tell our viewer about your trip to the Masters with your dad.
Well, when I was a child, that was the Masters every year is what we watched on television. And I think back then you didn't get the whole 4 days. And my father's a big golfer and has been and still is, and had worked really hard to try and figure out how we could get there because it was so exclusive. Well, after many years of trying, we made our first trip there in 2001. He became what's known as a patron. So he actually gets the tickets every year until he dies, and which is fantastic. So I've been fortunate to go 4 times total. But we got there early on the Thursday to see the ceremonial tee off with Jack Nicklaus, Arnold Palmer, who's still alive then in 2001, and Gary Player. And my dad doesn't show his emotions all that well, but he did have what I thought was a tear in his eye. And then he had asked, as we walked to the first green, he had made a comment about, because we'd been watching golf for so long and are so appreciative of it and how much work they put into manicuring those courses. And this is the best one we'd ever seen. We restrained ourselves from going under the ropes and running around on the green. So, but we really thought about it, but we knew that we'd be escorted out and never get to come back. But it was just one of those wonderful father-son moments that I was really grateful and appreciative to be able to have. So
What's very cool is the way you described your father as a patron of the Masters. It's like the reverse mortgage of golf tickets.
It is, and that's how they're referred, patrons, and it's a really great experience. I mean, if you ever get an opportunity to snag a ticket there, and you're a golfer, it is it'll change your mind about golf. It's just amazing.
Drew Brown of Home Equity Bank, and the chip reverse mortgage product is becoming one of the fastest growing segments in the industry. And if you'd like more information, Drew, what's the website for Home Equity?
The website for home equity is for the consumer is www.homeequitybank.ca. And we do have, or they could go, or they should go to joelscott.com if that's your website, Joel. I think it is.
They can talk to me, or they can go research.
They can definitely talk to you. Sorry, joelscott.ca.
That's quite okay. Drew Brown, thank you for your time. Thanks for some cool stories, and thanks for sharing your expertise today. I appreciate it.
Thank you very much for having me, Joel. I appreciate it. You guys have a great day.